Welcome. Just see live. Here, hold on, guys. Let me just get the grips with. Okay, I can see it. Welcome to the London session. I took a break in copper to the upside. Push. Sound. How's the sound now? Is it any better? Okay, that's fine. I'm back in the co-working space, so apologies for any slight technical issues. Alright, let's talk through this copper trade. So I just took a break, literally like a couple of minutes before I went on, from this break of the first hour of the trading range. So what does that mean? It means that we had the first hour of London going down, and very frequently it's directionless, and we're seeing that today. Okay, I think the internet is a little bit choppy in here, so let me see if there's anything I can do, because at home I actually have fiber optic broadband, which is pretty crazy. I may have to shut down a few things here just to improve that. Let's try shutting down a few things here. Okay. Just to lighten the burden of data coming through. Just gonna have to work without some of my tools. I've just shut down my bookmap because that's pretty hungry when it comes to data. Right, so it is pushing higher. I'm just going to talk through what I am thinking here on copper. So we've had this this big sell-off for quite a while now. 1 day, and then right back down into what's known as the I suppose you could call it the dead cat bounce. Meow. And this gappy area here is now no longer there, so we've closed the gap, and we did have some risk events. So we had Biden quitting, you know, a little bit of turbulence, and that can actually be bullish on the metals. So there is a little bit of fundamental analysis going into this. Daily chart is not telling me much, so all of these decisions for this particular trade are being taken from the day time frame alone. So what am I seeing on the profile? Just like you can have a gap away from the previous day's trading, so previous day's low or high, and then overnight moves away from that, and then you get the regular session or you get the London Open, and we are far away from it. In the same vein, we can also have the market opening with a gap in relation to where the distribution curve was from yesterday. And then what we're looking for is for that gap to close. So this is the trade that I'm in on right now. The stopping point for this trade is technically the value low from yesterday, which is located at 4.20. 420 again, like what is it with me and 420? So 4.20000. But we have the average session range high, which is a little bit lower than that. Now, if I manage to get 3R out of this, which would fall quite a bit below it at 418.60, I will be very happy with that. We have the overnight VWAP slightly higher than here for, at 417.17. So that could be a little bit of a roadblock to any further movement. So that's going to become my orientation point to see what is happening. Right now, the first orientation point was the initial balance high. So the high from the first hour of the trading range for London. It is also the reason why I do these sessions a little bit later, because I'm looking for that break. I don't want to be getting involved in a move without the break of that first hour trading range, because during the first hour you have market makers, you have locals who are not looking to take price anywhere to any new levels. They literally just want to take their commissions and be done with it. But after that is over, you do get what we like to call the other time frame participants. They are the institutions who might be positioning themselves for some larger movement. So that's what I'm looking for. We just had a very nice push higher. Now, since I'm in quite a nice profit, let me remove the privacy here so we can see where I am in this combine. Alright, so I'm already over 4 grand in P&L overall from London trading. So I will only trade this particular combine during London, right? So because I've gone over 4 grand, it's now time to save those profits. So rather than increasing size, I'm actually decreasing size. And this is why it usually takes me anywhere from about 6 to 9 days, sometimes 15 days to pass any larger combines because of that. So I am not pushing for more cash. I'm literally going safer, preserving those profits, and making sure that you don't lose what you've already made, right? I like the slow and steady approach. So yeah, that's pushing, so that's pretty cool. So far, very drama-free copper trading during London. Moves very nicely. It's not crazy. It's not unpredictable, I suppose. Now, yesterday I had a very long day, and the day started off great for me. But then we went into fast markets. I had this amazing crude oil trade, and I sniped it at like 78.02, and then I kept getting tired and tired, but I continued to sit at my desk and try to trade, and my mental capital was just spent. It wasn't going into the gap fill that we see copper doing right now. It was exactly the same trade, so I was looking for that gap close for the New York session for NYMEX, and it just kept hanging on me. So I decided, all tired, that I'm gonna flip that trade. So I had no level, nothing. There was pure tiredness at work, and it literally reversed on me. And I think I went in at like a complete nonsense price. So, you know, and luckily I stopped at minus 680, so it's not like a huge dent. And that was in my life, so I'm gonna try not do that today, because this is also gonna be a very long day for me. But I'll probably just do maybe 1 or 2 trades for NYMEX. I'm going to try doing it very early, and then I'm going to be done. I went to bed at 8 p.m. last night, so I did have more. But yeah, so I just wanted to say, be very careful trading on lack of sleep when our mental capital is a little bit suspect, because what it does, it shuts down your prefrontal cortex, right? So you get you start not really thinking logically, and I mean, I shouldn't have been in that second short at all. I mean, that was just complete nonsense. So be very careful what levels you're using. No one is immune from that, but at the same time, we can try and be aware of what is going on, right? So yesterday, I know that I was tired, and that was a mistake on my part to keep going. I know that my mental capital gets spent after about 3 or 4 hours, but no, I kept going. And I get it, you know, we all love what we do, and we want to keep doing it. But sometimes there's a difference between what we want and what we need to be doing for our business. So that's all gone into my journal, and I'm going to be very mindful this week, because it's a difficult week for me. My floors are being done, and I'm not in my usual environment. I have to get up really early to get the dogs off to daycare. So that's all something to take note of and just go, okay, I cannot be trading for 12 hours, because that's not going to give good results. Khaled is asking, what is the tool Deeyana is using to see the auction in the beginning of the session? So all of my charting software that you see here, that is Blatek MP, Blatek Market Profile, Blatek Supply and Demand, Blatek DR. So those are the main 3 indicators that you see here. This is something that I've used. They're my indicators, so full disclosure. I worked with a software architect to commission these tools for something that I needed that wasn't there many years ago. This was like 8-9 years ago now, and eventually we joined as partners, and we now run Market Stalkers together. So Market Stalkers / Blatek is kind of the same sort of entity. So Blatek is the parent company to Market Stalkers these days, and that's what you can see here. This is AMP Futures MetaTrader 5. Spoken about this before. I'm set in my ways, and I use MetaTrader 5 for all of my charting purposes. And then when it comes to its executions, I will, especially on my prop accounts, I will usually use Topstep X. That's where my live is. I will use it for certain combines, but I also use NinjaTrader as well. So I'm somebody who likes to sniff around other platforms and to know how to use most of them. Can I please share my strategy? If I was going to do that here, we would be here forever, because my strategy is not rocket science, but it has many moving parts to it. So if you want to learn the ins and outs of what I do, that cannot be done in 40 minutes or 30 minutes. Primarily because there are many moving parts, and one of the reasons why I can't find market sentiment and snipe my trades with relatively low drawdown is because it has so many moving parts. But it's very logical, so it's got about 4 different parts to it. Demand on larger time frames. I also have my own concept that improves that, called Q points. It looks at the established swings, and then you're looking for the zones that are sort of at the top and the bottom of their range. The second part is market profile. Third part is average ranges, and again I have my own concept, twist on average daily ranges that only uses the regular trading hours, which I refer to as the average session ranges, aka SR. Those are becoming pretty popular now because we got Coach Ray who's using them. We also now have a few other people who have clocked onto that. And I've also seen Edgeful added average, they call it average true range by session. And then someone correctly pointed out, hey, that's, that's actually Dee's concept. And so I said, yeah, I call them average session ranges. And then Andre was very kind to go, hey, should we change it? And I'm like, well, actually average true range by session is pretty good and descriptive. But you can call them average session range. I don't mind. We're here to share our experiences, and if that helps somebody, all the better, right? But the problem with me explaining all of the stuff that I do in one single sort of 40-minute session, it might take some time. You know, you see Hogue doing the group coaching. He dedicates each lesson to, you know, one problem or one concept, and each of these about supply and demand, market profile, average ranges, and my fourth one, time of day, they're each kind of mini concepts inside their sort of data set. And if you are not using them to the full potential and the proper way that you should be using it, you are probably not going to get that much use out of them. So I've seen people who only use value areas. They're like, okay, well, you know, value area, and then they plop the market profile onto their chart, or the TPO profile, as it's also known, and then they start looking at the developing value area. And I'm like, okay, well, the developing value can tell us that there's maybe a strong move, because if you see now on this chart, let me remove this and then I can show you better. So there's this little orange sort of rectangle, orange rectangle. Let me try and clean this up so you can see it. So this orange rectangle is the developing value area. Now the problem with using that is that it's still developing, right? It's not finished. So it's kind of like trying to use a pattern. Let's say I'm looking for a 3-pattern reversal, but then the third candle is still developing, and you're trying to use that as your signal. It's not going to work because it can end up as a continuation, right? So until it's done, you don't have the full idea of where that's going to end up. So for me, developing value is only useful if you're going to look at the strength of the move. For example, right now I was looking for a gap fill, and the price has moved outside of value during the TPOs that have already been calculated. And once this 30-minute candle finishes, this value area will recalculate yet again, right? So this is why I don't use current value for anything. And the amount of YouTubers that I see doing that is epic. High, and I'm like, value high is like 1 million ticks away. Like, what are you talking about? Oh no, I mean like current day's value. I'm like, that's kind of incidentally where the initial balance is as well. So yeah, there are certain misuses of profile components that kind of give you the fake idea of what is happening. And then I also see people using the value area from yesterday in the wrong way. They're like, well, we are below value, therefore everything below value is an opportunity to fade it back up. That's also false, because if you open near the value area but slightly below it, that's actually bearish. So you should be looking for a continuation in that same direction, and the only way that can be invalidated is if it goes further up into value and then closes back into value, which is when we have the special situation play. But until that happens, it's bearish. So don't keep going against that, you know. Only when we open with a significant gap, and then there's another little contextual thing there. If we open below value and below range from yesterday, so if you look at session low from yesterday's trading, when you're opening below that, that's when the gap rules apply. So that's why Hogue and I will always say gap rules apply. Let's go to the other side now. Let's see if there's evidence that the market participants want to go back to the other side to get a better price. Because once you've moved out so far, the guys that are now stepping in for this new session, so let's say overnight has moved copper quite a bit below value, and then London steps in. Well, they keep trying to go lower, but they're not going to get paid because nobody is interested in shorting this anymore at this time. They don't like it. So they have to go back the other way to pick up more orders, more liquidity, and all that good stuff. So there's a market mechanics aspect to market profile where you learn how the markets work, why things are happening, and that can bring you so much more confidence in your setups, much more confidence than just looking at the simple lagging indicator, which it can work. Like if you have very good discipline, it's fine just using VWAP and some EMAs for your decisions, but the problem is that most people don't have very good discipline, right? And I've always had decent discipline because I was a musician, I was an athlete, so that kind of came more naturally to me. Not to say that I didn't have over-trading problems, not to say that I didn't need to work on my self-control and impulse control, but it might have come a little bit easier than for most people. Even for me, when I started using Market Profile for intraday trading, it was very transformative. Suddenly I'm like, hold on a minute, I can explain it to myself why I'm actually getting involved in this trade. So rather than just it being a low or a high, suddenly it's like, right, it's a gap. Let's see if we can close that gap and what can happen on the way. So I would still look at support and resistance, so to speak, so you can still see that this is where yesterday's New York session was happening. So that was the low. And we are now kind of going above it. So that was the first level of resistance. Then we have VWAP. Can we get above VWAP? So it's almost like you're constantly cross-checking whether the trade is still valid or not. And that's a difficult mental thing to do. That's what sups mental capital for me, even to this day. Even though I know everything to the core, it still takes a lot of energy to make sure you're not missing things and that the trade is not being invalidated while I'm still in it. Yeah? Right, let's take some questions now. Can you analyze gold? Okay, let's have a look at gold. Last time I looked at it, it was a little bit quieter than I would have liked, but it seems to have moved. Now, one thing I didn't like about gold is that the value area from London is not that big. And we were already kind of sniffing to the value low. And then at the time when I was looking at starting this stream, copper was the only one breaking out. So now gold seems to be following this. But again, I don't really like the look of this technically. Let's have a look at the large time frame. So multi-time frame analysis. First of all, on the weekly chart, we're kind of in the middle of the range. So that immediately gets a little bit tougher to read. We have the all-time highs from last week. And until the goes somewhere higher up into this selling wick, longing in the middle needs to look perfect, right? It needs to look absolutely spot on. Everything has to align. Let's have a look at the daily chart. Daily chart, again, longing into a potential supply, because we have a speed bump supply. Middle of the range, speed bump supply. If anything, for shorts here, not for longs. So again, didn't like the look of that from a large time frame. And then again, this is all just chopping on a 4-hour chart. Yeah, it just didn't, I didn't like the look of that. On the day time frame, we did have an open below value, gap fill, and now into a value acceptance. But the problem there was if I didn't get the reversal from value low, I didn't want that, because I didn't want to get involved when... Okay, so let's go back to value acceptance setup. So the value acceptance is a setup where you're looking for one 30-minute candle to close inside value, and then your profit is the other side of value. That's it, right? So whenever you have a smaller value area size, that minimizes the profit margin. And anything after that, it's like it might happen, it probably won't, so it has a lower probability of working out. So from that side of things, I did not want to get involved. So maybe we get a better outlook for COMEX. Yesterday we had a very nice sort of auction failed into a failed auction. They carried on. So yeah, gold, I would leave it potentially for the COMEX session. I'm not too keen on it with the way things are looking today. Okay, Gorkum says, I have a question. On a normal day, how do you know whether it's going to be a range bound or a trending day? Well, you don't. You don't. But there are certain things that you can look at probabilistically and statistically, and then decide whether it's worth it to get involved in a setup that you're seeing. The very first sign that I would look for in order to determine whether we may have a potential for a range bound day is if we're opening inside yesterday's value or outside. Now, if we're opening inside value, it means that the market is in balance. So the only way that it can start trending is if we have a committed move that takes the price outside of that initial value area open, right? Second thing that you might want to look at is the current time frame, so current day, current session, and to see whether the extensions of the first hour of trading range, which we call the initial balance, have already happened to both sides. Now, if that's the case, on the vast majority of days when you have that double breakout of the first hour of trading range, it means that there's a very high chance that you're going to stay in that range. This is where Dolby's Dorito formation can be considered as well. So you can pair that up with the initial balance extensions to both sides and then just go, okay, this is a range bound day. And then from there onwards, you can also pair up. We're opening inside range from yesterday, inside value from yesterday. We have extended the initial balance to both sides. The probabilities around us having a breakout without any news coming in or anything is very low. So then you just play the range. Now, trending days are trickier. First of all, trending days, I know they're super juicy, and I know that many of you get that dopamine rush when you catch a massive trending move. But the issue is that trending days need a catalyst. So very rarely will you see a massive true trending day without something coming into the market as new information that causes that trend. We can have zombie rallies, especially on equities, but for the most part, those sorts of days will happen after releases, right? And here's an interesting statistic. Trending days, true trending days, which just keeps going in one direction with not many pullbacks or no pullbacks at all, they're really rare. They happen anywhere from like 10 to 20% when you're looking at the entire year. So how many times do we have trending days? Not that many. You can also have a limited trending day where it sort of starts to do something and then dies a death. Is it a trending day? Well, yeah, like it trended up, but was it a true trending day? No. So there's nuances over what you want to see. The trending day can start to develop when you see a strong move outside of the initial balance and then it leaves a big candle once the 30-minute time frame finishes. So let's say I am now looking to see single prints in this copper trade. In about 1 minute, we're going to have the 30-minute TPO close. And then I can have a look at whether we have single prints left behind. It means like we've jumped away from a level and left single prints. Some people call them fair value gaps. And by the way, I'm not an ICT trader. It's just Market Profile has similar sort of concepts that have been renamed over the years, but you know, exact same thing. Now, if you have single prints left behind, take a look at how big they are, and also what came before it. So right now, I'm looking at a potential reaction from VWAP here, so that's not that great. It means that my orientation point that I was looking at to actually give more bounce to go through VWAP, it hasn't happened. Okay, so I have to be a little bit on the defensive now with this particular trade, but I'm still going to give it these 10 seconds to finish whatever it's doing. But if we do leave some single prints and they stay, so the market doesn't start going through them, there's still a chance that we go back into the gap fill. In other ways, in other words, it means that the move is pretty strong. So that can open up a possibility for a trending day. So those are a couple of little things that you might want to look out for in order to determine whether you should be using range-bound strategies or whether it's okay to go into a trending move. Xavier, hey, Xavier is one of my dudes. Good to see you here. Can you please tell us how you use Bookmap as an additional conflict your setup? My setup is pretty basic on Bookmap. I'm going to try and opening it up, but it might cause me to be a little bit choppy. And that means I need to close out some stuffs. So let me just try and do this. Let's see if it's going to chop me up as soon as I open up Bookmap, because I have to close it because this internet connection here is not the best. I'm going to close this this little trade that I've got on copper because I'm going to be talking and I might not be able to dedicate my full attention to it. What's going on here? No, that's not what we want. Hold on. Bookmap. It's not connecting. Great. Hold on. No, that's the wrong connection. Sorry guys, I'm not going to be able to show Bookmap. It's not playing ball. Yeah, so Bookmap's going to have to be for some other time. It is not... Why is that not connecting? I don't get it. Yeah, so we're going to have to leave that for another time. It's I think, too slow. Let's try that again, actually. Hold on. Give me a second. I think it tried to connect to Ninja, but it didn't. I closed that one down too. So then it defaulted to the next available connection. So maybe if I do this. No, I would need to have Ninja open for that. Sorry guys, I'm not going to be able to show that this time. So yeah, let's just leave Bookmap for now. Because what I do, I have the Bookmap indicator and then I have to have NinjaTrader open with the Bookmap indicator inside it. And then when I click refresh, it basically just slaves it into Bookmap. But yeah, this internet is not strong enough to run all of that. Sadly. All right, let's move on. So what is the time frame to determine a failed auction? It's not necessarily a time frame. Yesterday Hogue was talking about 2 ticks and come back into IB like NQ yesterday, but copper outside 2 ticks then back in 5 minutes. No, so there's a couple of ways to look at the failed auction. The way Hogue and I look at it, it's not necessarily how many ticks is gone up. That's excess or lack of excess, right? So it's to do with where the price is actually spending time. So if it's spending time back inside the initial balance, that immediately opens up the possibility to get the failed auction, right? But if it starts to hang above it, like let's say yesterday NQ just went down to value high from what I remember, and then it turned around and then went straight through the entire initial balance back up. Now that was a failed auction, right? But ES had 2 ticks above the initial balance and then failed to the downside, so they were very much diverged. And when that happened, so we couldn't get further out than 2 ticks, which was a huge problem, right? So unfortunately, there you have to use your best sort of guess to see whether there's a cause for the failed auction to happen. Now, textbook sign trigger for the failed auction is a 30-minute close back inside the initial balance. But we can't always wait for that, because if you're going to wait for that on a lot of these very liquid products, what's going to happen is that it's just going to keep falling, and it's just going to be back inside the initial balance, and then your trade location is gone. Like, how are you going to limit risk? You won't. So yeah, failed auctions can be tricky, which is why I like to pair them up with another level. So let's have a look at what he was talking about. Copper outside 2 ticks, the back in up 5. So Jinx, are you talking about copper yesterday during New York session? Let's have a look. This is where I have the nice opportunity to go all the way back. Well, it wasn't 2 ticks. I mean, if we're talking about the failed auction in copper, there was a lot more than 2 ticks. I think you're thinking about the ES that Hogue was talking about, because he wasn't looking at copper. But for example, if I look at this, when we fell outside of it and then immediately went back, already at the site of the initial balance low, here. So once we went back inside, and the candle that I'm referencing here is this one, yeah? So it goes back into the initial balance, and it's just not coming out, right? It keeps spending time inside initial balance, and that's not necessarily time frame dependent, right? That's literally just real time, right? Because it's like we went back inside initial balance. You don't need a time frame to see that. But obviously, the longer it takes to stay inside the initial balance, the higher the chance of the failed auction. So hopefully that helps you to kind of sift through some of the conditions that we can have. But I mean, traditionally, yeah, the failed auction is definitely there when the 30-minute time frame closes back inside. But like I said, if you have very liquid products, if you want to limit risk, by waiting around, the problem is going to be that you're going to lose a trade location and therefore lose everything to lose a way to limit risk, and it's, you know, it's terrible. All right. Running on Empty says, hi Dee, what correlates positive with copper? Well, I would say that most of the metals on some days. It doesn't have to be all the time, but it can certainly correlate pretty well. So all sort of precious metals have a degree of correlation with them, between them. So because of that, you probably shouldn't trade things at the same time, like trade gold, trade copper, trade silver, trade platinum, because then you're going to be exposing the risk to the same asset class that is heavily correlated, and just going in on basically 1 position, 2 positions, 3 positions, and then something happens that affects all of the metals, and then you lose 3 times as much if you're in on 3 different metals. This is why some diversification is needed if you are trading multiple products, which I wouldn't really advise to do until you're very, very sure in your strategy. Jayhawk says, Dee, do you use volume profile? And if yes, during London session, from what time should I set it on? I'll be honest, I don't use volume profile that much. I mainly use TPO profile. And if I am going to use volume profile, I use it on sort of weekly time frames. If I press one button, I get the weekly profile here on the side, and I can also plop a value area there somewhere, so let me find that. There it is. Okay. Okay, so is this showing? Yeah, so here you can see that the point of control from like the last 3 weeks approximately, or a couple of weeks, is all the way up here. So that kind of lines up with the value low. Now, point of control on volume profile with large time frames is a little bit of a different thing. So if you're targeting that as your target, that's, and sometimes it can even be used for a longer time frame reversal area if you can match it up with something intraday. But generally, I only use point of control value, large weekly volume values as targets, and they're very good for that. But yeah, I use TPO profile mainly. Okay, next question. Inderjeet says, I can only trade London due to my location. What pairs would you trade? I don't trade Forex, so I would not trade Forex. I would trade gold, copper, like you see me trading copper here, right? So that's a pretty good thing. YM, Dow, very good for London, very good range. And once we get it, Eurex, DAX in particular. DAX has its own main session for London. So most of the moves will be done during London on the vast majority of times during the year, when we take like a full year into consideration. Average daily range for DAX will be filled during London. So those would be my choices. Copper is pretty good. Like recently, it's been very, very liquid during London. And it frequently does these like extended moves into New York as well, so keep that in mind. Tommy V says, initial bounce and value area, market profile, does it work better in New York or Asia or London? Neither. So you have to find a product that is active during those sessions. And then each of those, New York value, Asia value, London value, they are all separate entities and separate orientation areas that you can use. So for example, if you are trading gold during Tokyo, you will use Tokyo value area, right? And there's no such thing as do they work better. It's not, again, it's a market mechanics lens into the behavior of price. It is not necessarily be all and end all to find levels. It's just an orientation tool that helps you make better trading decisions. And yes, sometimes we can use them as levels, like previous day's value, but a lot of the other times I will use other things that are completely not connected to profile for orientation points, like VWAP. What is that? That's not, that's not market profile. That's just volume weighted average price. Same thing with my average daily and session ranges. They have nothing to do with profile. They're just statistical measures of the most likely range that we might have during the session. And yes, sometimes we might be able to use profile levels, but mostly I use it as a tool to tell me how strong the auction is, how weak it is. Are we succeeding or are we failing to bring further movement? So it's a lens. It's not necessarily, this works better. Maybe that's the thing that people get wrong about profile. Your future. Levels, gold levels. Well, can you tell us about gold? What I was looking at earlier, but the fact that I didn't like the whole location where the price is on a larger time frame. So I have no good levels. I mean, you can look at the shorts from the average daily high on gold at 24.21. That might apply better during COMEX. So that's one thing to look out for. And when it comes to, I mean, we're so far away from COMEX that anything can happen. I mean, if I tell you what the value highs are and value low, I can see that now we're above the COMEX value high, which was at 2400 roughly. But where we're going to open COMEX is anyone's guess, right? So this could fall, it could rise more. Like, I can't really tell you great levels right now. So yeah, we'll see what happens later. But yeah, this far out, I don't like to create my plans for the next session because there's no point. Everything will be subject to change. But I'm probably going to be doing my own live stream later on today on my channel, so maybe you can pop in and ask me there. Vit J says, D, for initial bounce and possible failure, should I be looking at daily range or IDR levels? I don't know what IDR level means, so if you can clarify that. ADR? Let's see. Okay, next. Hannah says, D, some days ago you talked about VDAX being over 17, crude over 35, something like that. Could you explain this again? Yeah, this is a very good question. So, some of our markets do have the VIX in them. And whenever the VIX gets a bit higher, like for example crude oil is now at 27 roughly, which is, yeah, it's not that great, but we do have some better movement these days, which is why I'm back trading it. However, a really nice movement that is more conducive to, let's say, intraday trading would be when it climbs over 35. That's been my experience. And then when it's over 40, it's completely crazy. So each of the products that I trade, I try to find some sort of a volatility index and then to match it up with whatever expectations I might have for the strategies and how to approach it. And similarly to crude oil OVX, we have the VDAX, which is the same thing, so volatility index for DAX. When that goes over 17, that typically means we're going to have really nice extended movement. So yeah, you can start using that as a little additional market state tool, because that's what it is. Gorkum says, how do you use Edgeful in your daily trading analysis? Which property is most useful for day trading? I'm new to it and trying to understand it overall. Okay, so let's do Edgeful. Let's have a look at it. NQ is a bit boring because it might be a little bit single-sided. Let's have a look at gold, since a lot of you are asking about gold. So one of the first things that I will be looking at is the green and red days by weekday. And then I also do like if I'm doing the short London, I will put those, that session. And then I will look at 6-month range, 3-month range, and year to date, just to get an idea of whether there is any sort of a long-term edge, or whether we're just looking at like recent development and some sort of market state change. So for example, Tuesdays for London on GC tend to be 68% green for the entire year. So year to date. 6 months, how does that change? It doesn't, it's the same, so 68%. Now, when we get into the last 3 months, we start to see a drop off of that statistical probability. Suddenly it's closer to 50-50. So that's not, that's not much of an edge at all. And in fact, if I was looking to, let's say, go long on gold, I would be looking at 3-month date range to be very close to what we normally have statistically on 6 months and even 1 year. So as you can see, Wednesdays, 69% green on gold. So maybe the better way would be to look for longs tomorrow, because that has a statistical probability. So that's the first thing that I'll look at. Second thing that I will look at is the initial balance breakouts. So here they are, initial balance breakouts during London for these hours. So 3 a.m. to 8:30 a.m. Eastern. The initial balance only breaks to one side by a rate of 60%. So that means if you're constantly looking for neutral days to happen during London on gold, you're probably looking at 30% occurrence, right? And then what happens if I increase that sample size to 6 months? Still very, very similar. So 60-30, 60-40. Year to date, 60-40. So that's pretty, it's pretty consistent for quite a long time. So London mostly breaks the initial balance to one side at a rate of 60%. So if I'm looking for a neutral day, we might get a neutral day, but I will then know in my head that that's something that only happens 40% of the time, and I will be maybe not expecting it. So let's say I'm doing a failed auction. If I know that there's a high probability that we get a double break, and let's say it's flipped, so we have the double break, which is like 70% during London, I will be extending my targets for the failed auction to go into the other side, the break of the other side of the initial balance. But if you don't have that, then maybe you should just finish your failed auction trade somewhere inside the initial balance because of these stats. So that's one way that I use it. And is there anything else? Yeah, sometimes, so average consecutive bars can be pretty good for sort of timing things intraday, but this doesn't happen often. It happens when, let's say we get gold going into some kind of a trend, and then I see 5-minute candles that are all green. So green candle, green candle, green candle. How many maximum green bars did we have in the last year on a 5-minute chart? So I'm going to go down to a 5-minute time frame here. How many? 11 during London, right? 11 green bars. So how do I use that? Well, if I go to the gold chart, I go down to the 5 minutes, and I look for the consecutive bars. Now, here's where I've seen people make a mistake. They go, well, this is all consecutive. Is it? Because this is not a consecutive green candle, this one. So here we only have 1, 2, 3, 4, 5 consecutive green candles. So there's nothing there for me. Not yet. So until you get, like whatever it was, 9, was it 9? 9 green candles that are all consecutive, there is no edge there. But if you see that, if there's 9 candles, then you might be coming to a fade moment. So it's like, okay, it's had 9 green candles. Edgeful says that that's 9 consecutive candles are the maximum that we've seen for the entire year. Let me try a fade. So that's another way to use it. Incredibly useful. People can get a little bit lost in Edgeful because it carries so many things and so much data, but I generally use these few pieces of information for some of my decisions. So not all of them. I certainly don't pour myself for like hours on end in Edgeful to find an edge because I already have something that has an edge. This is just like a little tweaks that might help me make a decision. So this is where, consecutive candles might come in. This is also where green and red days come in, and the initial balance breakout. So I find those three the most useful for what I do. Janie says, what carries more weight, value area or today's IB? I wouldn't say that they are either or. It's like, what should I focus on? They both work in sync. So they are a cohesive thing. So it's kind of like saying, well, what carries more weight, VWAP or 9EMA? Well, they can both carry different pieces of information, right? So they're not mutually exclusive, quite the opposite. So the initial balance gives you the information about the current day's auction, right? Where we are we breaking out of the range? Are we coming back into the range? If we are looking at the value area from yesterday, that gives you the information about where we're opening in relation to yesterday. So is it a gap? Are we inside? Are we in balance? How far away are we from it? So they are two different measures that work in sync rather than against each other. So I cannot answer the question which one carries more weight because they both measure different things, if that makes sense. Is TPO profile a custom indicator / tool? Yeah, usually you can get a free one that is not perfect but is usable in TraderTainment. So that might be the option. I mean, I have connections everywhere, so literally I have profiles on all sorts. In Ninja, again, I can't open it today, but in Ninja you have their own tool which is called Order Flow, and then you can literally drag it with a pencil. I'm so annoyed I can't open it today, but it is what it is. So it's not in the indicators, it's in the pencil. So that's the one you want. And then you have to change in the settings from volume to price in order to use. But yeah, it's generally a custom tool that exists in some platforms, but you have to pay for it in some other platforms. The one you see on my thing is obviously my indicators, so they are, you can't buy them through like MQL.com. So that's Blatic MP, but yeah, you have free tools. They're not as nice, obviously, because they are free, so they're rather basic, but you can generally control things like session times and a few other things. My one is very customizable, and obviously I have the Blatic backtest mode, which I'm always raving on about. That allows me to see what happened, like literally at the click of a button. And then, it's so customizable that it has a ton of inputs. So session schedules, everything works properly. It's not going to crash your machine and anything like that. You can control the TPO period, so you can use 30 minutes, but I know some people like to use 15-minute candles. I like to use the core 30 minutes. So yeah, it's down to you, down to how much cash you want to be spending for your trading tools. Are you taking payouts already? Have you already made some cash from trading? And if not, I would probably wait until you have a little bit of success with some of the free tools, and they can be clunky, like I get it, but in many ways we should earn before we start spending, because trading is expensive enough, and then if you start adding indicators that, like some of these MP, like we are actually generally pretty cost effective. I think we're like $99 or something one off, but I've seen some platforms trying to charge like $400, $500, $600 for a subscription for like a 3-month period, and I'm like, are you joking? And then obviously some of the web platforms came up with the free tools, which are a little bit clunky, but again, usable. Okay, we're going to get one more question, and then I'm going to finish the session. Dee McKenna says, Dee, is it possible to learn your trading technique? Is this available on your YouTube channel? Again, because I don't want to have a lot of people asking ridiculous questions. And we have, in the past, we've had some very, very beginner novice traders who have come to me. They don't even means to, like, for example, when we run through a level, and they're like, what do you mean? And I'm like, okay. And then, what is an engulfing candle? And just like really basic questions, or the worst one, what is a candlestick? So my method is only really for people who are already a little bit further along. Like, let's say you've done a couple of years of trading, you know what a candlestick chart is, you know what order types exist, you know how to read it, and you've had some success, but you're still struggling. So at that point, you might be looking at investing in education, and which is where my professional development program comes into consideration. If you do go on my YouTube channel, underneath every single video, you're going to find the link to the educational platform. Now, we also have enterprise level services, so, while it's great to provide things for free, and I do provide a lot of things for free on my channel, and, probably if you dig deep enough through my previous live streams, you could probably reverse engineer stuff, because I don't hide anything. But if you want to learn in a structured way, this is where you might want to consider investing in something like the Market Stoker's method. I'm actually, I'm laying out a lot of the pieces of the method here, and whenever I trade, I will always tell you everything that I'm using. It's generally quite unstructured. We're generally answering questions, we're kind of veering off subject, we're going back to the basics, whereas I've created the method in the lectures to slowly increase your ability to understand each concept. So that's why that exists. And obviously with that comes a trading platform, comes a whole bunch of stuff where you have the bookmark, you have your, the tracker where you've been. You can't just kind of plop a whole bunch of lectures in an unstructured webinar and expect people to have great results with it. So we are keeping it still as a pro development program that you can purchase. But like I said, if you try hard enough, if you are not looking for investing more cash, you could probably reverse engineer, like, I don't know, 70% of what I do. So we're not hiding anything. It's just the fact that I prefer to teach people in a more structured way. You can find some people on here who are my market stalkers. They can vouch for, what the what the method actually teaches you. But yeah, generally there's 4 pillars, and on the website I think it's about 60 lectures or something, and each of them are anywhere from about 20 to 45 minutes long, and each deals with a particular concept which is then expanded in the final module. Hello Dee, will you re-enter HG? Probably not at this time, because I don't like these wicks. In fact, we're coming to the part of the day in London when you typically get a fade of the moves. So VWAP is still proving a resistance. So just like yesterday, here we go, same time of day, right? Just like yesterday, we might actually now have a condition for a short copper. So once I'm back home, after I'm out of this office, I'm going to have a look at maybe shorting copper. That's my next step. I'm definitely not re-entering long, because why would I? We have built structure, so I'm going to finish it here. We built structure, we have 3 TPOs per row, we don't have any single prints left, and we have excess at the top around VWAP. That means gap fill did not happen in the time frame that it was supposed to happen. So now we're looking at more downside. All I need right now is to have a look at maybe bookmap, or even just a candlestick reversal. So if I get another sort of bearish engulfing somewhere, that would be my signal to re-enter trade. And even on a 15-minute chart, look at this. We're consolidating. We've gone absolutely nowhere. So this is where something like Dolby's approach might come in. We have a range on a 15-minute chart. So your entries now should be at VWAP for a short, which is what I'm looking for. But if there was a cause for me to look for more longs, I would be looking at the bottom of the range as my potential longs here. However, because we're still dropping on some larger time frames, that's probably not a great idea in the larger time frame context. So I am looking at shorting HT at some point today. Alright guys, I'm going to finish it here. Thank you for all your questions. Once we're back in my normal office, I'm going to try and get Bookmap up and running because I do need Ninja to be open for that as well. Yeah, apart from that, you can check me out later on my YouTube channel. I will be doing a stream, but it might be a little bit loud because my floors are still being done, and he could be like sanding the floor even further. So we might have to contend with some banging and drilling and stuff. Yeah, so apart from that, I will be here again on TopstepTV tomorrow, same time, Wednesday. So yeah, let's see what this rest of the session brings. Enjoy fast markets. I'm not going to be there today because we've had a bit of a shuffle schedule. Until tomorrow, I will see you again. So make sure to be less grasshopper, so don't overtrade. And let's learn to be more market stalker with every passing day. Thank you for joining me.